Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 29th of July, 2021. And earlier today, this morning in fact, we published our morning update, and we've placed a link to it in the description box below. Now in this video, we're looking at what the Fed's FOMC announced yesterday and why it has proven positive for gold and silver prices. So let's take a look. Yesterday, the FOMC of the Federal Reserve made its announcement on interest rates and monetary policy. Fed Chair Jerome Powell gave a statement and answered questions thereafter. Now you see, prior to the announcement, gold was trading just below $1,800, around the $1,796 level, and afterwards rose to $1,810, and today has continued its positive momentum to its current price of $1,822. Similarly, silver was trading around $24.70, having been as low as $24.51 on Tuesday, and after the announcement rose to $25, and like gold has continued its upward momentum and is currently resting around the $25.50 mark, having been as high as $25.57. So what was in the announcement that gave such cheer to gold and silver prices? Well, firstly, to put this in perspective, both gold and silver were originally down on their last Friday's close. So there was an expectation of some Fed hawkishness in view of the relatively positive economic data the US had announced in recent weeks. So even if the FOMC had been neutral yesterday, we could have expected at least a minor uptick in precious metal prices. The reality, though, was a little different. We didn't get neutrality. You see, whilst the FOMC neither raised interest rates nor adjusted the pace at which it buys government bonds each month, i.e. no tapering, Powell's words revealed it all. He stated that the US economy is still a good deal away from making, quote, substantial further progress, unquote, toward the Fed's dual mandates of stable prices and maximum employment. This is what he said. I'd say we have some ground to cover on the labour market side. I think we're some way away from having had substantial further progress towards the maximum employment goal, unquote. It was also made clear that the Fed is not considering cutting its purchases of mortgage-backed securities before its overall tightening process begins. Now this is important, particularly because a number of analysts and economists have questioned why the Fed is buying billions of dollars worth of mortgage-linked assets each month at a time when home prices have and continue to surge. Powell's reaction was, quote, there is little support for idea of tapering mortgage-backed securities earlier than treasuries, unquote. So they seemed at this rate pretty determined to, when they introduce taper, to taper both at the same time. We do wonder here whether there is an acceptance that perhaps any tapering of mortgage-backed securities before treasuries may indeed send the wrong signals. Now this was seen by many investors and analysts as a rather dovish approach, and we have to agree, but only to a limited extent. We have to admit that the Fed has a difficult task in balancing what it says. If it's too hawkish, we will witness what happened to the equity markets a few years ago when they raised interest rates by 0.25% in the December. Equity markets melted down, causing a reversal of policy. They will not wish to repeat that error. At the same time, inflation is rising, and whilst the Fed claims it's only transitory, it, along with the UK and EU policymakers, are really, seriously, quite worried about current levels and its continuing recent rise. The result is they have to be both dovish and hawkish at the same time. Frankly, an almost impossible task. The equity markets yesterday responded quite well, and although the Dow and S&P 500 closed marginally lower, they were off their day's low, and the Nasdaq rose 0.7%. In fact, European markets and UK markets this morning are up. Now, we did, though, see quite a weakening in the US dollar. With the index having been over 93 in recent days, it quickly fell to 91.98, and at the time of writing regained some composure and stands at 92.02. This dollar weakening has acted as a tailwind for gold and silver, and to be fair, for most dollar-denominated commodities. The question, of course, is, will gold and silver maintain this rise? Well, firstly, we prefer gold as opposed to silver at this stage, at least until we know when the economy is out of trouble. We're witnessing growing numbers of infections across the world of this new COVID-19 variant known as the Delta variant. Some states are reimposing mask requirements, as are some countries across the world. And we've just seen only a few days ago that according to the World Health Organization, the Delta variant has been detected in 124 territories worldwide, and it's predicting more than 200 million cases will be confirmed within a matter of weeks, with infections rising particularly in Europe and the Western Pacific region. Some examples: Indonesia has more than 1,300 deaths a day. They are so alarmed that some, believe it or not, pizza parlors in Tunisia are offering discounts on pizzas if people show a vaccination record, and some telecoms companies are offering free internet data for those who follow a mobile text prompt to register for a vaccine. Such is their concern with rising infection rates. Mexico has an infection rate close to 15,000 a day, resulting in the extension of the closure of the land border between the two countries, that's the US and Mexico, to non-essential travel. In Rwanda, cases and deaths have spiked to record highs week after week. By early July, all COVID treatment centres were said to be full. And this story and similar continue around the world. The issue for us is to what extent will this affect global trade, and what happens to the industrial demand for silver, in particular, if growth falters and economies begin to close down again. We're already seeing flight restrictions beginning to be reimposed. The Fed is admitting that whilst progress is being made, unfortunately there is still a long way to go. However, do not interpret that as a green light for dollar collapse and rocketing high gold and silver prices. Why? Because other countries are being equally as dovish. We've previously reported that Christine Lagarde of the European Central Bank has already declared that they are going to review their own asset purchase program, or QE, in the coming months, with a view to adjusting it, especially when only a week or so ago they raised their official inflation rate target and stated that they would tolerate rises above 2% for a while. The UK is in a similar boat, and whilst we do not think it will happen, we have seen banks prepare their systems to handle negative interest rates should policymakers deem them to be necessary. We're seeing for now a rise in the cryptocurrency market, with a market capitalization of $1.55 trillion and companies, numerous companies, investing in the asset class because of their fear of currency devaluations. Now, this money should be going into gold and silver, but instead many young and now older people see cryptos as the way forward, or at least as a means for hedging their bets. Just imagine the uplift that $1.5 trillion invested in either gold or silver or both could have on their price. Just imagine what proportion of these monies going into crypto have avoided gold and silver, which, in our view, is part of the reason, not the whole reason, but part of the reason, while gold languishes around $1,800 and silver $25. When you consider the amount of fiscal and monetary stimulus being injected into economies, unfortunately a large proportion of which going into the equity market and some now into cryptocurrencies, we should, even at modest levels, be seeing $2,000 plus gold and $30 plus silver, and that's really at a modest level. But we are not. When you have the likes of Elon Musk, Jack Dorsey, the Winklevoss brothers and Blythe Mathers, former director of JP Morgan Chase, all advocating Bitcoin and or cryptocurrencies, and more joining them every day, we can see why gold and silver have been in the shadows. You see, the young are excited by cryptos and platforms that enable them to buy and sell quickly, while gold and silver supporters are only published as people who complain about crooked governments and manipulation rather than advance the positive aspects of these precious metals. Or, at the other side of the scale, you get the pumpers who over-egg their case by predicting $10,000 gold and $2,000 silver, and have been doing so for decades, not just for the odd year or two, with each year not only to be disappointed, but outrageously way off the mark. Credibility is falling, if not fallen, and we can see why. If more channels stated the truth as we do, then there would be more credibility. Having said that, we can see why this does not happen. Just look at our viewing figures. The majority of people today do not want the truth, but a made-up reality. And unfortunately, one day they will wake up, but only after the damage has been done. And channels similar to ours will have disappeared because we find that we're educating and speaking to fewer and fewer people. So we get it. But do not complain when gold and silver prices have not reached the heights that we all dream of, when to a large extent it's the industry's fault and their spokespeople for overhyping expectations and failing to reach younger people from an educative point of view. So where does this leave us in terms of gold and silver prices currently? Well, strictly they should go higher. Common sense, basic economics, fundamentals suggest they should go higher. But equally, so much depends now on economic recovery, especially with regards to silver. And we have to wait and see the reaction to an increasing infection rate and the various governments' response to such an increase. For now, we feel that gold is reasonably priced between $1,750 and $1,900 with this uncertainty, and silver between $24 and $27 for the same reason. Any breakout in either direction will be determined by COVID, Delta, and various governments' response to them. And for that, time will tell. What do you think? Do share your thoughts, whether you agree or disagree with us. Either way, hopefully give us a thumbs up, subscribe if you haven't done so, and press the bell sign. Thank you for listening. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.